There's a movie being written here that we need to pay attention to. Here's the premise of the movie. The world, it's 2030. The population of the world is just exceedingly out of control, right? We're, approaching 8 billion people on the planet. And the government elites, which is always the case, right? If you go back and look at these movies, it's always the government involved. It's always the elite government people always involved at the top of these conspiracy theories. So the government elites decide that they need to engage in a form of population control in order to try to save the planet. But how can they do that, right? So they come up with this master stroke of genius. This is James Bond, So the government specter, right? They come up with this genius plan. They release a virus upon the planet that they then have to cure, right? And they already have the cure sitting in the wings, right? So they release this virus upon the planet, and in order to cure this virus, which they already have a cure for, they have to administer everybody a vaccine, and that vaccine has the nasty side effect of potentially indefinitely causing infertility. So they get everybody vaccinated. Basically, it stops the reproduction of humans, and then over the course of a generation, you reduce the size of the population markedly. Solves your problem. Interestingly enough, the reason I say this is because I'm reading over the weekend, right? I'm reading about the vaccine, and it says one of the side effects, they recommend that people that are thinking about getting pregnant not take the vaccine because it may indefinitely lead to infertility. Now, because again, we haven't tested this vaccine. But all I'm saying is this has all the earmarks. Somebody needs to write this movie because this has all the earmarks of one of these.
Stan Lee is rolling over in his grave.
He's like, I've just missed it by that much. We're moving into a seasonally strong period of the year, so you certainly want to participate, but you just don't want to be unbridled about your risk that you're taking, because things do have an ability to turn out and the unexpected can happen that leads to problematic outcomes, particularly if you take on a lot of risk. And there's a lot of risk taking going on in the markets right now. If you take a look at the number of people that are trading options, the fact that there's very little put option activity happening, people are not concerned about downside risk in the markets. All they're concerned about is trying to get as much leverage to the upside as they can. And if you even take a look at professional investors, they're now not only fully invested in their portfolios, they're over leveraged, right? They're trading at 106% equities. Everybody's in the boat. So this kind of brings up the question is, if everybody's in already, then what's going to drive the markets higher from here, right? You got to have new buyers coming in. So where are they going to come from? As we continue to move forward, there's certainly the ability here for markets to move higher, no doubt about that. And my only point is just to be a little cautious here, just from the standpoint of taking on too much risk. Because if you do wind up, 1 out of 4 coin tosses are going to get you a negative outcome for the year. It's about a 24% chance. Odds are very good that markets will be higher, but there is risk to the downside. So does that mean you shouldn't play it? No, absolutely not. You should be invested right now. You should certainly have some allocation to equities. You should certainly pick your spots, pick your choices. We'll trade this, this kind of year-end rally expectation as well, but we'll do it with very tight stops. There's a saying that I've heard this a tremendous amount now over the last few days. There's a record level of cash on the sidelines. There is no cash on the sidelines.
You hear that every year.
Every year. And it's a great bullish argument, but there's no cash on the sidelines. Why? Because for every buyer, there has to be a seller. So whenever somebody buys something in the market, somebody had to sell their shares. So the net transaction is always zero. So if there's a pile of cash magically sitting on one side of the market, when it comes into the market, the other side of the transaction will sell to meet that buying demand. The net liquidity is zero. The problem today is there is no liquidity because there are no sellers. Nobody's willing to sell until the price reaches a point that you can drag sellers into the market. Now, here's the trick. It works in reverse. When prices begin to fall, the buyers will evaporate and the sellers will be rushing in to sell. And that's why you see declines like you saw in March, where it's a 35% decline in a month or a 10% decline in a month, like we saw in both September and October. It's because buyers will buy much lower and sellers will sell much higher. You know, bonds really kind of be telling us a very different story than what the market is, and the dollar is also telling us a much different story as well.
The problem with looking at bond yields is you have a whale buying bonds, right? The Fed is the largest buyer of U.S. Treasuries of mortgage-backed securities. So how do we know what the price of money is, right? The price of money is the base of capitalism. That's what allows capitalism to work so well. Then the price of money are interest rates, right? Interest rates are not meaningless, but they're certainly heavily affected by what the Fed is doing. I guarantee you this, they wouldn't be where they're at today if the Fed wasn't doing what they're doing. We know that. They would be higher, right?
But we say that, though, but if you like to look at a correlation between interest rates and inflation, they pretty much track each other pretty closely. So, and this is why I asked you about the dollar, right? If the economy was really booming the way that we're suggesting that it's going to boom next year, money should be flowing into the U.S. dollar. It's not. It's actually going out, suggesting that economic growth is actually substantially weaker than what economic reports say they are.
Right. The long-term trend in interest rates should have been lower. It has been lower, and they should be low today. What we look at are real rates, right? The difference between the interest rate and the expected inflation rate. And no lender of money should ever want to lend money below what the expected inflation rate is, or you're actually going to lose money. And no one wants to purposely lose money, right? So right now, real rates, 10-year real rates are minus 1%. I'm not saying interest rates should go to 5%, but I'm saying they should be about 1% higher just to get to the point where someone lending money is just flat, where they can just hold on to their purchasing power, let alone make money. The question is, well, what happens if mortgage rates rise by 1%? If interest rates rise by 1%? The problem and the reason the Fed is doing what they're doing is because they know that this economy will fall on its head.
By the way, guys, this is for all you guys listening right now, because we're the worst, right? Guys are the worst. You know, historically, when you'd go to the mall and go shopping, I was the guy that was in the mall on December the 24th, you know, typically
Frantic.
not frantic. Look, I'm a guy, right? I know how to shop. I know what I want before I go.
Yep.
I know what store I'm going to get it from. I'll walk in, I'll buy it, I'll leave. It's like
Straight line path.
You know, like when I used to go shopping with my mom, you know, she'd go to every store in the mall and then go back to the store she originally started at to buy what she wanted, right? So
that's not fun.
No. But back in those days, you had to feign a lot of stomach aches to get out of the shopping thing, right? So it was the worst thing ever when your mother looks at you and goes, "We're going shopping today." No! So
I may throw up.
I'm very sick. I have a stomachache. She'd always get me though but if you go with me, we'll stop by the toy store. And it's like, okay, great. And then she left that for the very last store, right?
Yeah.
So she was smart.
Bribery always works.
And she knew how to do it. Anyway, but you can't do that now. Right. And particularly, guys, so if you haven't ordered your Christmas presents yet, you better do it, because now with FedEx and UPS and the process of delivering vaccine, it is almost assured that whatever you order is going to be delayed and you may not get it in time for Christmas. So you better get busy.
Or
yes,
your package may be misdelivered and instead you
wind up
get
with
a vial of COVID vaccine.
Our whole box with dry ice.